Well, it was another day for the record books as all the major indices closed at all-time highs. And you know what? I hear the boo birds. They're coming out, but I can say firsthand that there is not irrational exuberance, as most individual investors, even the most ardent Trump voters, are still hesitant about owning a piece of the action. Now, the notion of buying the dips is so far-fetched, and if you're still using that excuse as a cop-out, I suspect many people actually are going to wait for this market rally to go even higher. Now, ironically, the next dip may come on news later in the summer when tax changes are actually pushed through Congress, but not before. Be that as it may, the Dow Jones Industrial Average is on a record run for consecutive sessions. And by the way, this has all happened without even moving 1% one way or the other, 45 sessions. ETFs and equity mutual funds moving at a pedestrian's pace, and so no one is suggesting that there's a mad dash. No one's going crazy over this market. There's not that kind of exuberance except in the market itself. By the way, there's several messages from this market that are pretty clear that there's something beneath the surface that speaks to anticipation of growth, and not just in the United States. You know, I pointed out the big movers, Caterpillar and U.S. Steel on Friday, both had huge sessions today, but it's a global metals move. It includes steel from all around the world, and it speaks to a surge in demand beyond inventory rebuilding. Take a look at this ETF when you get a chance, SLX. It's up more than 10% in the past 5 sessions, 151% in the past 52 weeks. But note, it's still 58% below its high point in 2008. The index is being driven by Rio Tinto. Well, that's a proxy for China. Vale, that's rediscovery of the economy in Brazil. And ArcelorMittal is represented in 22 countries. Now, there's some additional messages from the market in this session. Tech is getting a little tired. Even as Apple finally eclipsed that previous high after taking a 2-year detour, you can tell there's not a lot of oomph coming from that sector. Restaurant stocks, which have been beaten up pretty good in part to this massive food deflation where Americans have rediscovered their kitchens again, well, starting to see consolidation. In fact, today Popeyes popped on takeover scuttlebutt, and I think there's going to be a lot of deals in that space. Crude oil is interesting because it needs even more convincing, even after we got a notice of an increase in global demand estimates and proof that OPEC actually is not cheating. Still, oil continues to stumble around. I think the key there is going to be inventory levels in the United States. Now, I'm loving the action in agricultural stocks, including Agrium. And for more on that, by the way, and my daily commentary, go to wstreet.com.